Okay, everyone, I am back. I am Carrie Little, the designated managing broker of Caremark Realty Group, and I am the blogger for smartgirlmedia.com, your educator in real estate in Illinois, maybe Florida one day. I do speak all over the United States, but I am licensed in Illinois and Florida. Still trying to figure out that Florida, the forms. But anyway, so I want to talk to you about affordability, whether you're a buyer, a seller, real estate agent, and the market is changing. Here's what I know. So I've been in the business since 2001. You probably know this. And when I started, I bought my first house. I bought my house on an interest rate, which was an ARM in 1997. And so the interest rate was expected to go up every month. Now, in my head, I'm thinking my interest rate is going to go up every single month. Now, 9/11 happened, and my interest rates actually went down, but I had already refinanced. So it didn't change my rate much. So here's what I want you to know when we talk about rates. 2021, November 2021, interest rates could have been as low as like 2.5%. And now it is October 2022. So if you're watching the replay, it's October. And even on the news today, the newscaster was saying, interest rates are up like around 7%. Here's my tip: work with your lenders to get the actual rate. So I'm going to use some rates today as some examples on affordability. So in 2021 and even late 2020, we could buy houses, and even though inventory was low, prices were going up, but homes were still affordable because interest rates were lower. Now homes are still affordable today. It just depends on the scenario you're in. So here's what I want you to remember: when home prices are up, sellers sell at a higher price. And then that means when the seller sells and they go to buy, they buy at a higher price. It is what it is. Now, home prices are starting to come down. We've seen it even in my own office. I've been signing off on price changes. Why? Because when interest rates are up, affordability changes. So now if a seller is selling for a little bit lower, guess what's happening? It's going to all equal out, because now when the seller sells for lower, they're going to buy it lower. So don't panic. If you need to buy a home, buy the house. When interest rates change, you can refinance. I shouldn't say it's like buying a car, because buying a home is like buying one of the most expensive things you'll ever buy, but buy what's affordable. Listen, when I purchased my first house, I was not thinking about where it was located. I wasn't thinking about schools. All I know is I was tired of paying someone else's mortgage. And I got tired of not having a garage, and I got tired of hearing the neighbors. So I was like, I'm buying a house. I just needed to buy something I could afford. So here we go. So I'm going to share my screen with you. I created a Google spreadsheet, and I used a few different home prices. So if you're a real estate agent, I'm saying leverage a calculator from your multiple listing service. If you're a consumer, you can Google it. And I looked up different houses in different cities. And I used the calculator based on if someone was putting down 3.5%. If you put down more money, your payment changes. So I went based on 3.5% down. And then I put in the home price, and the mortgage rate at 3% came to this. And then at a 7%, it was this. So, and remember, taxes will change the rate, and taxes are different in every city, every county. You could have an exemption. So this was based on a $225,000 house. I don't even remember the taxes, but I put in the numbers. And when I put in the interest rate at 3%, this is the estimated cost. Work with your loan officer so you can get the payment. Then I put that same property in at 7%, still with the 3.5% down. I didn't add in private mortgage insurance. Well, that was in MIP, or private mortgage insurance, but I didn't add insurance and HOAs. So just know this is still an estimate, but it'll kind of give you an idea of the difference in cost today. So now you are going to be spending $529 more estimated if you are buying at a 7% interest rate. So this just means that the house you could have afforded last year, you might not be able to afford today, or you're putting more money down because the interest rates are higher. If you buy at 345, 3% was around 2,300, now about 3,100. And now the difference in cost is $810. I have consumers and agents in my office saying, I'm just telling my buyers to wait. No, if you need to buy, you buy. And then you refi when you can refi. Or you just start searching for a home that is in a price range that's affordable to you. When we hear the word affordability, people go, ooh, low income. That's not true. Affordability is what you can afford. Affordability for someone that's making $2 million a year is different for someone that's making $500,000 a year, or someone where household income is 150,000, or even someone where their household income is $75,000 a year. Affordability is based on your income. It's not a bad word. So look at this. Even if someone purchased around $596, now remember taxes, look at this, a $1,400 difference. And then at 100,000, $235, not too much difference. And then today I put in 175, so about 410 or 412. So if you're someone looking to purchase, if you're a real estate agent and you're trying to have the conversation, here's some things I want you to think about. Talk to your buyers about affordability. It just may have changed today. Can they wait? Sure. But do you want to keep paying someone else's mortgage or investing in their building their wealth? So you might go buy the house that you love and like, but it might not be your dream home today. If you are a seller or you're working with sellers, this is where our sellers need to make a decision. Listen, even though right now I know we are still in a seller's market, but market time is up. And buyers are saying, ooh, 7%. So the house that they could have afforded last year, they can't afford today. So they're looking at a different price point. So if you're a seller, if you need to drop the price, drop the price. If you don't have to sell, maybe you take the house off the market. If your home is currently listed, work with your real estate agent and have the conversation about affordability. Go look at the difference. There you go. If you ever have any questions, type them in the feed. And don't forget to join me live, especially if you're a real estate agent, every Friday at 9 a.m. Central Time on Instagram. Thanks for watching. If you are a real estate agent, invest in your first 6 weeks in real estate or my membership. I'd love for you to continue learning to earn with me.